All right, guys, welcome. We're here today. It's Bob Woerner and Hannah Perkey with Evelo team here for our monthly market update. Today, we're going to be talking about the real estate market in October and what we saw happening there. And so we'll just jump right in. So, Bob, I'll let you start. What happened in our local central Indiana housing market in October?
Yeah, as you mentioned, we'll just get right to it. So we've been doing this for going on 4 years, I think. So a few slides we hit up front is what that median sales price looked like in our market for the month ending October. So we ended at 285. That was down a little bit from the prior period in September, but up a little bit from where we were last October. So still seeing some growth. We've obviously just gotten back to a more normal growth pattern in terms of year over year and month over month than what we've seen the last couple or 3 years. Next up is that kind of cumulative average and median days on market. So the big 15 here is the median. So that's the same as where we were last month. That's up about 25% from last year. And then the second line on here is the average. That was at 36. So just another one of those ones we like to track each month. The month supply of inventory, we've talked about that a lot. Balanced market considered anywhere from like a 4 to 6 month supply of inventory. As you can see here, going back to 2020, we spent almost 3 full years under 1 month. So we're starting to see that go back up some. We're at 2.1 month supply of inventory in October. That was up about 6% from last month and about 11% from where we were last year. And then the last one in this little segment, and then we'll hit a few more, is kind of that average list to sales price ratio. So again, we spent a lot of time above 100 over the last couple of years. And for basically really all of this year, mostly we've been a little bit under 100. So 98.1% currently. And the reality is we've been fluctuating right in there with a couple small tenths of a percentage point, both this year, month over month, and year over year.
Yeah, great data. And I think that's so good for our audience to digest, especially if you're thinking about selling, because I think this is still lagging data, which means today's numbers could be a little bit different. But if you're selling, that expectation that it's going to fly off in the first weekend over asking price is not the market we're in, right? Showed by the months of inventory and the list of sales price. So I think that's really great for us to be looking at and just educating ourselves on what the market looks like. So that's all the tracking of the shifting market, right? So what are the other things that you've been following to show the shifting market that we're in?
Yeah, so a couple of the other things we looked at as things began to, turn around a little bit in different directions. We started tracking a few more things, probably around this time last year, maybe a little bit earlier. One of those is active inventory. So we've been up above that 5,000 active units again. That is actually down a little bit from last month and down from where we were last year, but still above 5,000. And then closed sales, we've kind of been tracking that to see how many closed sales there have been year over year. So we're seeing those decline. We're down 8.3% over last month and down 16% over last year. And one of the other ones we look at here to kind of go hand in hand with that is the number of new listings, right? Because that's kind of our, you said leading and lagging indicator. So new listings is a bit of a leading indicator, although it lags a couple weeks because this is last month's data. But we had 3,098 new listings. That was down 7.4% month over month and 7.3% year over year. And then you actually hit on something unknowingly in a comment. And I like to look at lots of different data. So I kind of found a new piece of data to introduce this month, which I found interesting because we get asked this question a lot when we're preparing offers, in particular for buyers, right? And even though the average list to sales price ratio is fluctuating under 100 now, there still are certainly homes out there that sell for above 100%. And when I was doing some data mining a couple weeks back for a team activity at a team meeting, I kind of came across a slide I hadn't seen before, and that's the percent of closed sales above list price. So I thought that was kind of a new one to track. So you'll see that even though the average is under 100%, 19.7% of the closed sales still closed above list price. But obviously that number is dwindling from where we've been. That's down 9% month over month and down 13% year over year. But I found that one interesting. That's still, about a fifth roughly of total closed sales are still selling for above list price.
Yeah, I love that. That's a fun one to look at. And I think it's good for us to know that because as we go to listing appointments right now, that's the thing is we've seen some unpredictability in knowing what to expect, right? So we can look at the data, it is lagging. So that helps us to have some guidance. But when it is shifting, all the numbers are changing. And so it's looking at what's the rate of change a lot of times in that. Great
Yeah.
info. All right, there was a lot of communication, social media, et cetera, about interest rates over the past week. What can you tell us about interest rates currently?
Yeah, so again, obviously there's a lot of things that impact interest rates. So we just look at this market survey that is kind of put out each week by Fannie Mae, Freddie Mac. They've been tracking data for, I think it goes back to like 1971. It's something crazy like that. So I always kind of pull the 5-year trend to present here. Last week, we've been going down the last couple of weeks, right? We had gotten pretty close to 8, maybe right even above 8 in some cases, probably for some of those weeks in terms of averages. Strangely enough, at this time last month, we were like at 7.57 or 7.6. So we're right near that, pretty similar. But I found a kind of another way to introduce some of the data here too. And this chart now has like a 1 week change, 1 year change, what the 4 week average was and what the 52 week average was. So that kind of was an interesting new kind of way to look at it to me. So down a little bit from last week, right? Almost a quarter of a point. We're up about 4/10 of a point from where we were last year. And the last 4 week average was 7.67. So we're down almost, about 1.7% from that. So, still kind of hanging out there, but you'll see if I know it's a little hard to see sometimes here, but we are on this like 3 or 4 week downward trend. We'll see if that continues. It seems that it has settled a little bit. We're certainly not headed back to 4s or 5s.
Yeah.
But if we could get back into the low 7s, mid 6s, and that kind of thing over the next year, that would certainly bring some changes to the marketplace.
Yeah, absolutely. Okay, very cool. All right, so how about final thoughts? Anything else we should be thinking about right now with the market?
Yeah, I always try to think of something. We're kind of at the end of the year, headed into our first major holidays. I think the end of the year brings major changes for a lot of people. I think we see a lot of things like engagements, marriages, wedding planning. And I think a lot of people just look to set new goals at the beginning of the new year, right? So this is just kind of we revisit this every now and then, but if you have some of those life changes or goals coming up and you're kind of deciding, do I sign a lease for another year? Do I buy a home? Right. This is just kind of the 3 main things to think about, right? So rents, they will always continue to go up, right? The median, you can see this first box here, the median asking rent since 1988. It's done nothing but go up. I mean, it has spiked even more over the last 3 or 4 years, kind of right along with housing. Obviously, building up tangible value in an asset, right? When you rent, you don't get any return on that investment. All your money goes to the landlord. When you buy, right, you pay down your home loan, you build equity, you get the growth of the value of your home over the years, and that kind of leads into the last one, right? Just growing your wealth over time. But at the end of the day, right, if you're kind of thinking about which way you might go for 2024, would love to just meet, talk about it, see what situation might work best for you. But I just thought that might be a good one to visit as we get near the end of 2023.
Absolutely, yeah. And I'll do a shameless plug too. We're having a vision board training in January, and I love those different pieces, Bob, because I think that's the thing is sometimes it seems like a far off goal, and we love to help talk through some of those steps to get there. So we'll have that training in January. So check out our Facebook for that. But that will be really talking through some things we do as agents to goal set, but integrating that in and maybe buying your first home or buying your first investment property will be on there. So we'd love to invite you to that. So thanks, Bob, for getting all that together. We know that takes some work to organize that, and Bob's the most numbers oriented from our team, so we appreciate him analyzing that data for us. If you have any other questions about these pieces that we can dig into for you, you can reach out to us at the contact info below. And we hope you have a great Thanksgiving. We're grateful for you for being a part of this group and plugging in, and we just hope you have a great time with family this upcoming week. Thanks so much. And as Steph always says, make each moment count. Bye-bye.